Good morning, good afternoon, good evening, and welcome wherever you are joining us from the world. We're excited to be sharing NFTs with you and everything that is a buzz around that. Joining me tonight is Scott Picken and our two industry experts, Brad Yasse and Paul Niederer. Thank you for joining us tonight with our community. Now, as always, I'm going to be here monitoring questions, so we ask that you please do pop your questions into the Q&A box. So that our panelists can easily see them. If you pop them into the chat, we might not be able to see them and we might miss them. So if you want your question answered, please make sure that it goes into the Q&A box. As we have people joining us from all around the world, why don't you say hi in the chat box? Let us know where you're joining us from. Jay, thank you for starting that off and letting us know that you are coming in live from North Florida in America. We really do appreciate that. So to everyone else, I'm going to hand over to Scott and we're going to get this started.
Awesome. Thanks very much, Lee. And I see that David's jumped in from Italy and Zim in South Africa and Jing from America. So it's quite unusual that Americans are wide and awake and fully engaged. So let's get started tonight. It's tonight for me. I'm in London. And I have been here for 2 weeks and I enjoyed all 2 weeks of London summer. So it was wonderful. It's now over and started raining and winter has begun. What are we going to talk about tonight? It's going to be around NFTs. What are they all about and how to participate in them? What I'd like to just start off with is to introduce two of our guests. The first is Brad Yasse. He's an entrepreneur, investor, mentor, and advisor with a global focus on blockchain and innovative technologies. He has conceived and bootstrapped several companies to maturity over the past 30 years. Brad is currently the CEO of Equify, the premier decentralized global banking platform. He's also the founder of Beyond Enterprises that I know David Orban, who was on the presentation 2 weeks ago, is actually a part of it as well, offering strategic and technical leadership, advisory, and support to all projects in blockchain implementation and development stages. As the co-founder of the Blockchain Investor Consortium, with over $5 billion allocated to blockchain and cryptocurrency projects, Brad has access to extensive deal flow with experience analyzing disruptive technologies. He has participated in dozens of successful crowd sales, raising billions from hundreds of thousands of investors since 2016. And I had the privilege of meeting Brad through David Orban and his team back in, and I actually forget, Brad, now if it was 2017 or 2018, in the last kind of gold rush of the whole kind of crypto mania. But yeah, we met a couple of times at the different events and always been fascinated by what you do. So welcome tonight. I think you're in America at the moment, Los Angeles, if I got it correctly.
That is correct. Thank you for having me.
Brilliant. And just as a bit of background, originally from Turkey in Europe. And so certainly got a very good understanding of the world coming from Europe, living in America and understanding kind of where the world is. Our other guest is Paul Niederer, who I don't think is anyone new to this community. Paul has been part of our ecosystem for many years. He's one of the world's leading authorities in collaborative funding, crowdfunding, and asset and income stream fractionalization via the blockchain. He's a specialist with NFTs and the fractionalization of the same. NFTs will have a huge impact in this area. In the future, it is envisaged that all assets will be represented by NFTs evidenced on the blockchain. Through a series of lively, informative, and practical presentations, Paul Niederer has taught thousands of people how to profit from this area of the market. And interesting enough, Paul and I met in 2015 at the first crowdfunding event held in Beijing. And a long time ago now, Paul, over 6 years ago. And yeah, it's been a fascinating journey, and I really appreciate you being up from Brisbane, Australia, and I think it's 3 a.m. in the morning. So we truly do have a global audience, with Lee being in Costa Rica, me being in London, Brad being in Los Angeles, and you being in Brisbane.
Exactly. I've got the headphones on so I don't wake my wife.
Well, that's yeah, please don't, because I've met her and I'll get into trouble. So we did this series last year, Wealth 5.0. There is the link, Lee, if you wouldn't mind popping that link into the chat box for people, or people watching the recording. We had 7 phenomenal webinars this time last year. We have not repeated the same topics, so people can go back and watch them from an evergreen perspective. With regards to Wealth 5.0 2021, we did the webinar last week or 2 weeks ago, sorry, on the top trends for 2021 and 2022 and beyond, and what investors should be focusing on. This tonight is all around NFTs. Then on the 5th of October, we've got the 16 macro trends, which are intersecting to create a generational opportunity of this decade. We've then got why EdTech and FinTech markets are two top markets getting the most momentum with regards to the IPOs and how wealth is being created in the space. We've got a webinar with Kathy Wood and why she's so successful for investing in high growth technology companies, what we can learn and copy from her. And then finally, impact investing, how to make a profit while living a life of purpose and leaving a legacy. So make sure that you connect with those webinars over the next couple of weeks and months. This was a webinar that we did to kick this whole thing off with Clem Sunter, amazing, amazing guy. He basically has just written a book on thinking the future. I would highly recommend going and watching the webinar. We got phenomenal feedback from it on global scenarios, where the global economies are going, where the global environments are going, and how it impacts you as an investor to make the right decisions for yourself. We've got two opportunities or gifts that are going to come towards the end. One is I'm going to share with you an opportunity where, often people only get to participate in companies once they IPO. Many people like to get involved kind of in the private equity space before they go to IPO, but very few people get access. Very few people want to be involved in companies when they rank startups, but we're about to launch a campaign in about a month or two's time with seeders, and it allows people to participate in a high growth company, and I'll let you know about it. And then Paul has very kindly also said that he's going to do a bonus session at the end on how to make money out of NFTs. And he gave me a better topic, which I like, how to make money, because it's very simple, but how a side hustle with NFTs could become a valuable income stream for you. So I think what we're going to do now is we're going to get straight into it to really kind of have a fireside chat between Paul and Brad around what are NFTs. Before we even get started and we stop, we worry about how to make money out of NFTs, let's start to understand what they are and where they're going. So what I wanted to show people just quickly was that if you take NFTs, and if I go through to my websites here, I will put these links in the chat box for everyone, but there's a bunch of articles that I've got here. Money for Nothing, NFTs spark a digital gold rush. And they talk all about this guy, Beeple, that sold his painting for $69 million. And this was through Christie's. So there's two articles here. There's another one on this Christie's article. Now, what's really interesting, if you go into it, this was back in March. There's actually a video here, which is him and effectively doing it.
So we are in my living room and we're watching the closing of the auction, which closes in an hour and 18 minutes. It's already at like a absolutely ridiculous amount. That I made is very much influenced by the tools and influenced by the work of a bunch of people in the crypto community as well.
Hey Mike, this is Jason. I just want to say congratulations. You're at 25,250,000. This is crazy, man.
Jesus Christ, what the hell? Oh my God! 50 million! What? Oh my God! 69 million. I think it probably means digital art is here to stay. I'm going to Disney World.
So I thought that was just worth kind of starting off. This artist, if you didn't see that, made a painting for 5,000 days in a row and then put it all together and sold it for $69 million. And you can see kind of the connection to crypto, etc. So that's the one article. This is all around the same thing from Christie's. Then there's an article here by Seth Godin on speculation is the new luxury. So we're going to talk a lot about this tonight as to whether this is a bubble territory or whether this is the future. Then there's two more articles, which I think are very valuable on the history of non-fungible tokens and then the non-fungible token Bible. So if you want to read and understand this stuff. And then what's going to be interesting tonight, we are going to talk about it as well, with NFTs around real estate and where it's actually going with regards to that. We're going to discuss some of the major industries that are going to be disrupted. And then, as I said to you already, around the real estate space. So what I want to do without further ado is I will post all of these links. Paul, if you want to get started, we'll go with Age Before Beauty. What is your understanding of an NFT in simple language, basically? What is a non-fungible token? What are we talking about tonight?
Well, I guess, so the evidentiary side or the authentication side of it has always been a problem. If you look at the area we've worked a lot in, Scott, in the property area, that even like a marriage certificate or something like that, it's always difficult for people to find out exactly what something is. And the blockchain's given us the opportunity to record things sort of indelibly on the internet. So they're there for, people to see or access. And, an NFT is just a level above, which is usually related to something called a smart contract, which has got information or aspects of something recorded in sort of like a little package that's sort of on the blockchain, you could say. So whether it's a picture, an audio, or whether it's title deeds or whatever, it's given away for things to be recorded. And the word in there, fungible, with non-fungible tokens, like the word fungible means that like a dollar note is exchangeable for another dollar note, so that's sort of fungible. If it's non-fungible, it sort of means unique and original. So for me, it seems to be a way that things can be recorded individually on the blockchain, so that people can actually then trade them or swap them or keep them or collect them or that sort of thing. Like, it's not a technical answer, that one, but it's sort of, that's my view anyway.
Well, I think the point is we're not trying to look for the technical, because we're trying to explain it in simple terms. Brad, from your perspective, what do you see as an NFT? How would you position it?
So an NFT is basically unique digital placeholder for something. As simple as that. It's unique, it's not fungible, and it's digital, it's on the blockchain, so it's also immutable. The way you set up an NFT stays that way forever. So it creates this opportunity to have NFTs be placeholders or representations of digital or actual physical objects and goods in a way that we couldn't do before. Anyone who has dealt with art knows that the provenance often makes or breaks an art piece. If you don't have the provenance from the artist to the last owner, the value can drop, several zeros for an art piece. With blockchain and NFTs, now we're seeing an unbreakable chain of provenance from the artist to the end user, to the collector. That is fueling this craze over NFTs in the art world, NFTs in the metaverse, NFTs in the gaming space.
And tell me, Brad, why would someone pay $69 million for a piece of art? What is the logic behind that? Why they're doing that?
Well, I mean, that's nothing new, though. Why would someone pay $69 million for an old painting that doesn't depict anything relevant to anything we do right now? I mean, why is a Picasso, why is a Monet, that valuable? The value is in the eye of the beholder. Someone has the means to appreciate that art in a way others don't, and they collect and appreciate it that way. It is also probably a little bit of a status symbol. A lot of people who collected masters and classic pieces don't always appreciate it as much as art historian or someone like that, but they do like the prestige that owning an original piece brings them. So it's the same thing in the digital world. It's prestige, it's collections, and just the ability and desire to own something unique.
Let me just share something here quickly with everyone. I have put all the links into the PowerPoint, and I have sent them to Lee as well, so that we can drop them into the chat box for everyone. So all these articles and stuff. So let me just go back to the slide that I was on. So I found a definition here, which I just wanted to share with people, which is in line with what Brad and Paul are really saying here. And a non-fungible token, or NFT, or a new type of asset class, unforgeable digital certificates of ownership and authenticity. Non-fungible simply means unique, where $1 is the same as any other. No two non-fungible items are alike. Your car is non-fungible, as are your shoes and Picasso's Weeping Woman. They are unique items with a history of ownership. Anyone can download a picture of Picasso, or your shoes for that matter, but the originals are owned by somebody, and that owner has the sole right to sell them. So I just thought that that was quite a nice way of kind of explaining roughly kind of where we were at. Let's move to the next.
Scott, I was just going to say there has been an example where an artist has taken a photograph of the original piece of art and then destroyed it on video and recorded the video in the NFT so that people can see they do actually now have the original of that piece of art, which is a bit strange when you think about it.
So tell me why this year? Why did NFTs come to such a prominence? And let's just go with the same order, Paul and then Brad. Why? Actually, no. Let's swap it around. Brad, you have a go first this time. Why did they come to prominence? I mean, we were doing ICOs, Brad, back in 2017, 2018. Then obviously the market crashed. Why 2021? Why has this been the year that NFTs have exploded?
I think it takes a few years for non-technical people to, one, get exposure to new technologies, and two, find very innovative, creative ways to bring that technology into their lives, into what they do. So NFTs were, at least on Ethereum, were created in 2017. You couldn't have NFTs until that Ethereum improvement proposal was implemented in 17, and then you were able to create NFTs. That was highly technical and unrelatable by majority of the people. So I think, again, this is just my observation. I don't really know what the market forces did to make the year 2022 the year of the NFTs and onwards. But I think it took a few years for people to realize what it is, realize what it can do, and learn ways to use it. Again, artists are very creative people. They are amazing. They enrich in our lives. They're not technical. They don't write Solidity contracts and NFT token smart contracts. So someone had to bridge the gap, and protocols like OpenSea and such started doing that, making it really simple for non-technical people to create these things. And as more of them were created, we saw a huge adoption cycle, starting with CryptoKitties that almost crashed the Ethereum blockchain, then CryptoPunks, and the rest is history. So yes, a layperson can create an NFT using one of the platforms. So I think what happened is COVID catalyzed people's interest in digitalization of things. When we couldn't meet with each other, when artists couldn't hold gallery openings and sell their goods, their statues, their paintings, their art in a physical manner, they started looking at, and for survival reasons. It wasn't like, oh, let's explore what blockchain can do for my art, but it was more probably in lines of, how do I sell my art and get some food on the table? And then that catalyzed the whole adoption cycle, because now you had a very motivated group of people looking into a technology that really enables them to have a solid income stream.
Perfect. Paul, from your perspective, why do you think it popped this year?
Yeah, well, there's a number of things that are sort of intersected, and there's a couple there from Brad I had to copy down because I didn't have them. I think that catalyzed by COVID was amazing. But first of all, you've got increased computer power and connection and decentralization. Like there's that ability to have computers all around the world that can act like nodes and spread information. Then you've got the smart contracts, which is what is built upon the Ethereum blockchain, so that you can execute transactions and things like that. And then you've got digital currencies that enable you to pay and fractionalize those transactions and pay recipients. And of course, people need digital wallets or crypto wallets to store those funds. And then these apps that are built on top of the Ethereum network enables digital exchanges like the one Brad mentioned, OpenSea, for people to be able to swap things and onboard fiat to crypto and things like that. And then, of course, the blockchain to indelibly record all those entities and transactions and identities and things like that. So there's a lot of things come together. And of course, the COVID one there, which is so correct, that all of a sudden there was this impetus to use all of this in for NFTs.
So how do you, I'm battling to join the dots. How do you see COVID on NFTs, because people couldn't go to Christie's showroom or something? Is that the logic, or what's the thinking there?
Well, that's part of it. I think, Brad, you can elaborate on that, but it's just people had time at home. They created things. They couldn't share them as easily with other people. Yeah, Brad.
So let's take the example of a painter. Pre-COVID, they painted. They invited interested patrons, both existing and new, to either a gallery or to their workshop, and they could see these works. Now, they can also put them on a website, but a lot of the art, when it's not in its real form, loses. So when it goes two-dimensional, it loses its uniqueness a little bit. It flattens. So pre-COVID, these events were held, and people were able to buy this art from this artist. When COVID hit, not only the artist couldn't leave and promote him herself, but also the ability of the interested parties to get exposure to the art and be able to purchase it kind of went away. And then the artist started looking at options. How can I get exposure to my art? And that's when they realized that there was this movement towards creating certificates of ownership that not only allow them to have unbreakable provenance, but also to benefit from resale of their arts. Because NFTs are smart contracts and they're programmable, an artist can release an NFT and not only benefit from the initial sale, but from every sale afterwards to a certain extent. And because the community, the crypto community, was actively educating different circles. I mean, art and crypto communities have always been hand in hand. And so they started realizing not only this is an option in COVID days to create these digital certificates and create digital art as opposed to physical art and sell that, but also create these revenue streams that they didn't have before. I mean, as an artist, once you sell a painting, the next owner doesn't pay you anything. They just buy it from the previous owner, and it's recorded if you're a well-known artist or if it's a recognizable piece of art, and that's it. With NFTs, they realized not only I can do the sale in a fashion that doesn't involve physical contact, but I can benefit from the lifelong journey of this art piece. And that really excited the community. Add to that all the hype around different digital art drops and the ease of creation of digital art too. I mean, when you're doing a 2 painting 2 meters by 2 meters. That's a lot of materials and canvas and space you need. So creating physical art also takes a lot of space. You need a workshop. Creating a beautiful digital art still takes the same amount of space as we're using doing this video conference. I mean, it's just a couple screens, couple software that you use, and your computer. So suddenly the effect of claustrophobia that took over most of us turned into an opportunity to create in a smaller space, not in the open, not in the physical form, but in the digital form. And a lot of artists adopted it.
So if I look at the next question, Paul, you both mentioned it when we spoke about NFTs, but there is a combination and a connection between crypto, kind of blockchain, and NFTs. Could you unpack that just a little bit? Like, are they different? Are they the same? You've mentioned they're on the blockchain. Is there a difference between an NFT and a crypto? How do the three come together?
I want to answer one of the questions, and then I'll jump in really quick to that one. I never said an artist is going to stop creating physical art to do digital. I just said, given the circumstances of COVID, now they started looking into digital art, whereas if they could still do their gallery shows and meet with their clients and patrons and followers, they might not have had the same level of interest in NFTs. Your question, Scott. NFTs are just another type of smart contract. So crypto assets or tokens on any blockchain are smart contracts. Basically, you deploy a smart contract. That contract says this is Scott token, and there's so many of them, and this is the Genesis address, and then they become usable on that respective blockchain. NFTs are very similar. It's a smart contract. You deploy it, and then it says these are NFTs, non-fungible tokens, but they're still tokens, and there's X amount of them, and these are the characteristics. So you can program a finite supply. You can make them unique. You can make 1 million of them. You can make them, do things like profit share with each transaction, have fees with each transaction. So it's just another smart contract, another type of smart contract that you deploy.
So Paul, from your perspective, is there a difference between an NFT and crypto, or are they the same thing?
Well, I think that the sort of generic terms like crypto you can use to pay for an NFT, you could say that. And then, and what was interesting, what Brad mentioned before about residual value, or an artist, if it's sold, can still receive a share of that painting as it goes through its journey of life. So if an NFT sells to somebody, then the artist can actually get a royalty stream from it, and that royalty stream would be paid in crypto. So the smart contract, like, it's an interesting term. For me, I imagine it, you'd imagine in a real estate transaction, and you've got the two lawyers in the room and maybe the clients, and in order to settle a transaction, they check to see that this person actually owns the property. The other person's got money in the account, that they're maybe not a foreign owner. It qualifies in that way, that all the bills have been paid and there's no liens against the property. And it's sort of, the lawyers tick things off. They go tick, 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 tick. And when it's finished, it just automatically transfers. And it's a bit like there was a smart contract, because as Brad was saying, if you've got a painting and it's decided, or you've got a series of artworks, say there's 10,000 of them, they've all got different attributes, but if you buy them, you've got to pay 5% to the exchange and so much to the artist, and then you get the right to have this and that, and it's all evidenced in that smart contract that is part of that NFT. It's not that easy sometimes to get your head around it, but we're getting there.
Oh, well, I think that's the whole point of this webinar tonight, so that people can understand it. There's some great questions coming through, but I'm going to keep the Q&A till the end. Let's run through some of the major ones. So, Paul, maybe you start this time. In terms of major industries disrupted by NFTs, what are your thoughts on kind of where things are going and which industries are going to be, disrupted? You're muted, Paul. Paul, I think you're muted if you're talking.
I think
Yeah, sorry, I lost my screen for some reason, and I'll try to work out what it is. But yeah, well, you know, because one of the ones that we're involved in, Scott, is of course the real estate one. That just an example I gave. That I think in Dubai at the moment you can actually do property transfers from smartphone to smartphone. I'm unsure, but that's where the destination of all this is heading, because you know, if you're going to get something evidenced on the blockchain and you're going to get a property on the blockchain, then the government or the people that are sort of custodian of the records of it or the authenticity of it, they have to actually have all their systems on the blockchain. And it's not until that happens that you can easily transfer things through with smart contracts. So I think any of those industries whereby there's cumbersome intermediaries and government departments that have filing cabinets, because at the moment, if you have your property registered, it's probably in some land titles office, either in a city or a town or a country. And in the future, when it's on the blockchain, it'll be on thousands of computers around the world. And it means if the you know, the land title office computer goes down or somebody hacks into it or whatever, then you know it's a completely different set of circumstances. So I think those type of industries will be the ones that'll be disrupted.
Brad, from your perspective?
I think I want to use the word evolution instead of disruption, because oftentimes when we talk about disruption, the incumbents get very defensive and worried about it, and I don't want you know, I don't want to give a bad name to NFTs. I think any industry that relies on immaculate record keeping and records being easily accessible and available and transferable is going to see an incredible change with NFTs. So right now, real estate obviously would, especially land and property registries would benefit from it, because then you could just transfer a token and transfer the property, which would save tens of thousands of dollars every time a transaction is done, and probably months off the, or at least weeks off the escrow process that exists all over the world. Art is definitely benefiting from it, especially the residual income, because even physical art can be associated with an NFT and benefit from the characteristics of the NFT and the smart contract, as opposed to trying to put the provenance on a piece of paper like we have been doing. And then, you know, you can look into identity. You can look into, anytime we need a unique identifier for something, from your car registry to ID card to passport to property and beyond. NFTs are being used and will hopefully be used more, because they eliminate a lot of the middleman processes that are slowing down the transactions, making them more costly, and just creating friction between parties. I mean, one thing that always surprises me these days is, you know, I can send you any amount of value across the blockchain, and all I need to know is your wallet address, and nowhere else in any traditional system that's possible. Yet we don't have 100% adoption of this technology globally because of various reasons. But I see NFTs playing a big role in a lot of the government functions, once they are perceived as a tool, as a technology, as something that's going to make lives better, as opposed to this disruptive outside force that's going to break everything and take power away from governments and things like that. I think we haven't done a good job in the blockchain ecosystem positioning the value of the technologies we create and adopt in everyday life. It's always been like, we're going to disrupt this and we're going to break that, and that's not going to exist in 5 years. And then that kind of rhetoric usually ends with heavy pushback from powers to be, because they don't want that kind of change. They want evolution.
Yep. No, I like that. I think that's a very good concept. Paul's worked in the regulation space for well over a decade, and no regulator likes change, particularly when it's disruption and the like. Yeah, as I'm sure, Paul, you can associate, things will often make a huge amount of sense, but there's a huge amount of resistance from primarily the regulators to have change.
Exactly.
Let's go to the next one. We've spoken already, Paul, you've alluded to it, Brad, you've alluded to it. Real estate, a lot of the people in our community are I don't know if you call me a real estate fanatic, but people that enjoy real estate and the impact. When you look at these type of articles where the creator who sold an NFT house for 500,000 will be living in an augmented reality soon, what's your take? I want to take it from two different sides. Brad, if you can talk about virtual real estate and kind of this, where you're living in kind of virtual real estate and augmented reality. I remember when I met you at one of the conferences, I think one of the things that blew me away of one of the ICOs was they were selling gaming. Like the guy would buy himself like a fancy sword so that he could go and like play in the gaming industry. But like you'd pay like $100,000 for the sword, but it'd be like his own personal sword. And then there was an ICO to like build these swords and then make money out of it. I mean, I remember just sitting there like, I felt very old that day because I was just like, I just did not understand it. Now in the real estate space, I'd like you to talk, if you don't mind, around the virtual world. And then Paul, you've already started alluding to the practical world of real estate and the impact, but let's kind of go with the virtual world first, and then we'll come back to the practical world.
Sure thing. So there is the concept of metaverse, and that's nothing new. That's nothing tied to blockchain or crypto or NFTs, to be honest. Decades ago, there was a game created called Second Life, and it was literally a game mimicking everyday life in a virtual setting. And it made real money for real people because they would buy property in virtual life, then it would appreciate because more people wanted, there was scarcity. And it was a game. It wasn't even a blockchain game or an NFT setup where you own the digital items and the properties. It was just on some company's server, but people made fortunes or lost fortunes in this virtual realm. What virtual reality and metaverse and augmented reality does is it creates an escape for people. You can be you can be a doctor and have a really stressful life because you're dealing with patients and sickness all the time, and then you log into your virtual world, whichever it is. I use Second Life as one of the older as an example, but now there's plenty of projects, Algorand, Sandbox, creating these virtual worlds. And you can become a musician and you forget all of the worries of your daily life being a doctor, because in this world, you just go on stage and sing. Now, what NFTs are doing is they are cementing the ownership of digital items, because up until blockchain and NFTs, the game companies said, everything you create and everything you have in this game is ours. Basically, that was their end user agreement. So they said, if you own a car in our game, that's our car. You don't have any claims to it. You can't touch it. You can't do anything with it. Now with NFTs, the prices and the value creation is parabolic, because now people actually own the items they create. If you own a bed or a car or a house in one of these metaverses, then it's yours. It's attached to your wallet, and the game creator or the community running the ecosystem can't take it away from you like the old school traditional game companies used to do. If you violated their end user agreement, they would close down your account and you would lose everything. Now with NFTs and metaverse that's persistent throughout time, you can own virtual stuff and they're yours permanently, which gives an incredible opportunity for people not to just escape into a different persona, into a different realm, into a different career world, but also invest in it. Like the sword that you're talking about, if it's one of one and there's no one else who's going to have it, of course, paying $100,000 for it, if you're going to play the game, makes sense, because you know that value is not going to go away. As long as that game environment exists and there's interest in it, you always will have a very unique item that's going to hold value. It's similar to, again, physical art, where you buy something and you know that Jack Pollock is gonna not lose its value because there's a finite amount of them, and you own a unique piece from this artist who's no longer with us. So it's the same thing in the metaverse and the NFT space, where you buy land and it's unique. There's only that parcel and you own it. You buy a house, and as augmented reality devices become more sophisticated, I'm mainly excited about haptic feedback features, because right now we can see things in pretty clear resolution. We can look at things, and with the hand controllers, we can even interact with objects, but it doesn't feel natural. You know, you can't hold something in your hand. You can't grab it with your fingers. If you hit a wall, it doesn't feel that you were hit on your shoulder or arm. It just, you shake a little because of the controllers. So I think the next gen, once we go into bodysuits kind of immersion in virtual reality, this is going to be a huge market for those who just want to change their reality when they get home.
Sure, it's it really is an area that we can go very deep into when one's looking at. Paul, let's take a step back and take something, you know, when Brad's talking about a digital house in augmented reality in a world that most people don't even know where it is, it's very hard for people to understand that. Whereas when we talk about a real house and kind of how NFTs can change either the property or real estate industry, depending on what people understand it as. What's kind of your take? And I know that you've been doing quite a few projects in the space as well, and you even had in your description tokenization and fractionalization of NFTs. Do you want to talk a little bit to this, Paul?
Yeah, well, that's, you know, in many ways, a certificate of titles a representation of ownership, and the difficulty now is how many people's names can you write on a title certificate. And if it's some of these offices that have become digital, and you can add more, but they're not that keen on that. So, you know, I was at a meeting yesterday at the University of Technology, in which they were going through something called multi-signature contracts, and also a type of a co-op structure where all of the people that perhaps that may own a part or a fraction of an NFT that represents a property, and it had a whole rule structure that if you wanted to do something, then you'd have to have there'd have to be 3 signatures or whatever, or there'd have to be so many votes. And so this ability to take an asset and fractionalize it, and then the representation, the owners representing it, or the people charged with handling it, have got all sorts of rules and structures that they can manage themselves. And like in Australia, if you have an SPV that owns a property, it's like a managed, they call it a managed investment scheme. Well, what it's heading more towards, you don't actually need that manager. The smart contracts and the ability to people to vote, and the ability of people to sign and authorize things at a particular level, means that it changes the whole ball game, really. You haven't just got all these intermediaries sitting there with their nose in the trough taking lots of money for you to actually handle transactions that you can actually do as a group of people that own it. And I think that's where the most exciting thing for me is, that we're heading rapidly in that direction. And it just showed, this was a project called Beef Ledger, which tracks boxes of beef from all the way from the farm to the plate in China, so somebody can scan a barcode and they can see the whole journey of that product for authentication, for its originality and everything like that, and then all the signatures authorizing it to be shipped, to be everything like that. And it was just, you know, you sort of saw the future in front of you, but that's where I see it's heading.
Excellent. There's a couple of articles that I've read recently where prop tech has had one of the biggest growths in funding in the last 12 months. And it's really this whole space where it's the second oldest industry in the world. People can guess what the first one is. And yet it's pretty much as archaic and as it used to be. It hardly has changed at all. And rather than using the word disruption, because Brad will be upset with me, let's rather use the word innovation and evolution. But in this whole prop tech space, I don't know if there's anything else, Brad, in the physical world that you'd like to add, and or Paul in the virtual world that you'd like to add just to this space, because it absolutely fascinates me. And who's someone who spent 22 years now, 23 actually this year, in the space of trying to merge together technology and property real estate. I find this space absolutely fascinating, but equally I find it quite hard to understand, the difference between the virtual world and the real world, and whether there will be true value in the virtual world.
I think what I'm most excited about, Scott, is globalization of real estate transactions. Because right now, if you're buying a property in your own country, it's a challenge. There's escrow, there's all these attorneys involved and intermediaries, and 10% of the purchase price, at least in the US, goes to those people every transaction. And obviously they're here to stay. They don't want to go anywhere. But it becomes even more complicated if you're trying to buy property in another country. Now the rules are different. The treatment is different because you're not a resident or a citizen of that country, and it really stops global economic activity from happening, because real estate is one of the biggest asset classes in the world. Period. Whether it's land or structures on it or everything in between, it is a huge opportunity to break those barriers and create a global standard of transacting in real estate. And I think with NFTs, with the blockchain, for the first time in our lifetimes, we have an opportunity to do that. Because now no government needs to trust the other one, because that was the issue. Well, you want to buy property in Kenya, but we don't trust Kenya and land registry. It's not on par with U.S. land registry or what have you. And it might have been true, but now we have a technology that can be adopted anywhere in the world, and that can create a global standard that's much easier to use and much quicker for all of us to access real estate everywhere in the world. And that's really what excites me about, NFTs and blockchain coming into the prop tech space.
Paul, just before you go, Brad, it's a really, really interesting insight, and someone should create an international global real estate marketplace that allows people to invest between countries. That's a great idea. I wish I'd thought of it myself.
Maybe you did.
Paul, from your side, just you've touched on the real world, but anything on the digital world that you foresee?
Well, I think the excitement is this community building, is that the ability to have like-minded individuals focusing on something is so much easier. And like Brad was saying a while ago, when the artist could only show people from his gallery or around the street or possibly on his website, to whereby people are actively engaged in the creation and the launch and the involvement and the benefits and all the aspects of the smart contracts relative to that. You build a community. Like just this week, there are a couple of NFT launches. One of them was about vampires and the other one was Guardians of the Universe. And like before it started, there were 37,000 people waiting for the launch of that particular artist's series of works. And, and there are only 10,000 of them. So you could imagine what happens then. So this ability to create communities, to interact with them, to let them to share, and then afterwards for them to be involved in the process and the development and the growth of that particular art stream or asset or whatever is so much easier now.
Yeah, no, it's incredible. You know, there's a lady I know here in London that's an artist, and she sells a lot of her stuff on Instagram. And, you know, again, in the old days, you walked into a studio. Now you're doing it on Instagram, and obviously NFTs take this to a whole nother level, because, you know, you don't even have to merge the old world and the new world. Let's we've spoken a lot about hype and the future and the excitement, and to some extent, many would argue there is hype. I find this article on 7 reasons to avoid investing in NFTs. What do you think, and, you know, Brad, I don't know if you want to go first here. What do you think investors should be aware of? And again, you know, in any investment, one should go in and have and just to be clear, we're not giving investment advice to anyone, and neither any of the presenters. This is just people's opinions. But I think what's important here is that with the good, there's also the bad. What should people be aware of?
Well, with anything, let's call it any investment, because a lot of people look at NFTs as an investment. With any investment, you have to be mindful of why you're getting the asset and what your expectations are. So if you're buying an NFT that costs $50,000-$100,000 with the hopes of tenfolding your investment in the next day and getting out, maybe that's not a wise decision, because that NFT might have realized its full potential by the time it gets to you. I'm sure Paul is going to talk about how to get in really early and benefit from the initial rise. But a lot of NFTs, especially in the art world, are distributed in a fairly fair fashion. But it's impossible to get in at that level because there are a lot of bots and a lot of very smart and fast people buying them up at the original price. Then they start going up because more people want them than there are NFTs. It has been the case, at least for most of the projects in the space. So I'd be wary of NFTs becoming bad investments because of the timing of the purchase, not because the NFT in and itself was a bad investment when it was created, but because, you know, you may buy it at a very inflated price that it's not going to come back from. So I think doing a little bit of homework, doing a little bit of due diligence, not just jumping into every hype and every, you know, NFT with FOMO without knowing what it is, why is it valuable, why do people want it, is dangerous. That would make NFTs a bad investment. I mean, I have friends who have chicken NFTs, horse NFTs. I mean, it's just a chicken and that sits in their wallet. What's the value of it? What's the purpose? I mean, they got it because they participated in the fair distribution, and now it's 10 times more valuable. But is it going to go another 10 times? Should someone buy it off of them? Or is it just a novelty that should sit in their wallets and cluck and whenever called on the screen? I don't know. So with any art, unless you have an appreciation for the artist or the art piece itself, it may not be the right investment for you. And if you're not thinking long-term, which I define by 3 to 4 years, any crypto is so volatile, whether it's NFTs or cryptocurrencies or other crypto assets, that it probably is outside of your risk tolerance. You know, if you're putting money you're going to need in 6 months in NFTs, that's not a good investment, because that NFT may be down in 6 months, it may have zero value, or it may be up. But I would recommend to everyone not to over overinvest in the space. Like I think it's more important to understand the space a little better. And if you're going to lose money on NFTs, lose a little that you can afford to lose while you're learning what's valuable, what's going to keep value. Because it's with any art, you buy 4 photographs from 4 different artists and 3 of them are worthless. And in 5 years, no one even remembers them anymore, and they don't even look good to you. But that one, the 4th one that you kept, is so much more valuable because the artist went to become someone very well known for that type of art, and now you have an original. So it's somewhat of a gamble, as is any investment. And I would say, if you're going to do one investment, take your time. Take your time, get to know the artist, get to know the community, spend time. If you're just trying to invest blindly, that's probably going to be a bad investment.
Paul, you started with equity crowdfunding back in the 2000s, first equity crowdfunding platform in the world. You've seen investors kind of investing kind of through the space as technology changes it. How are NFTs any different, and what should investors be wary of?
I think if they're a representation of actually a physical asset, like a house or something like that, then okay, you'd use more of the traditional ways to value it. In terms of NFTs that represent art and things like that, it's, as Brad said, it's probably not a lot different than how you'd assess a painting now. But and then you think, is it a bubble now? And NFTs have gone up and down, and you could say yes. If you put $100 a week and you can afford $100 a week into it, then that's fine. But you don't want to put a whole lot of money. But the thing is, like, if you look at OpenSea, which is probably the most vibrant NFT marketplace at the moment, they're opening 3,000 accounts a week, and there's a couple of 100,000 accounts in total. And you look at that in terms of the gaming industry, in which there's, hundreds of millions of people playing games, and within those games, people have swords and mounts and horses and things like that will eventually become NFTs that they can take outside of the game and trade. Because at the moment, if you own a beautiful horse and a sword and you're at level 60 in the World of Warcraft, the only way that you can get that back is to sell your account illegally and somebody else can use it. In the future, though, you'll probably be able to put those things up on a marketplace and bring it back into the game, and people will pay for it. And so there's so many aspects to this, but so like over time, it will go up and it'll go down depending on supply and demand. But at the end of the day, I think it's here to stay. It's here for the long run, and the representation of all sorts of things will be handled. There'll be marketplaces, and people will make a lot of money. People will lose a lot of money, and and that's how it is.
So let's take the next 10 years, and to both of you. I mean, I've Gary Vaynerchuk, someone I've been following for a long time, and he, this article, which I've sent to everyone, is, is bullish on NFTs, crypto, and 13-year-old kids. And he goes on to explain how you need to understand, how social media is changing. But what's your take, Brad, on the next kind of 10 years on this NFT space? Now, you said a long term was 3 to 4 years, so I'm doubling that.
Well, there are 2 pathways. One is global adoption, and in a way that doesn't upset the regulators and the governments too much. If that's the path that we are able to take, which is what I hope for, then we can see most of the record keeping be on blockchain, because that eliminates record rooms, storage of paper files and digital files on server farms that the government has to operate. I mean, if we could position a distributed, decentralized future in a way that's beneficial to our governments and saves tax money and makes them look good, they're going to adopt it, because there's no reason to, spend hundreds of millions of dollars record keeping if you can put it on a blockchain, maybe not a public blockchain, but put it on a permission blockchain and give all your citizens certain permissions to access it. So the identity can be there, and the land registry can be there, and art registry can be there. I mean, think of the amount of money and cost reduction that the governments would be saving by doing that. So that's the future that I'm hoping for, and that would mean NFTs play an integral role in our lives, and hopefully we establish global standards, and hopefully no one even talks about NFTs anymore, because it's just a technology layer. The same way you don't talk about 7 layers of the internet. Most people don't even know what they are, but they use the internet and they conduct business on it, and they're happy to do so. I would envision a future that embraces decentralization, that embraces the new technology that's empowering that, and incorporates it into the evolution of existing systems. The other more bleak future is we go at it and we try to disrupt things, and then it becomes illegal. They say, oh, you can't own NFTs in the United States or in South Africa. You can't own crypto. You can't do this. And then it would be an underground thing. I mean, NFTs are here to stay. They're not going to go anywhere. But the applications and the use cases can be above ground and benefiting billions of people, or underground and benefiting just a smaller group of people because they know how to use them and they know how to benefit from them. It's just, how it's not a technology or adoption or community question. It's purely a regulatory and political question where NFTs go and how widely we use them in the future. In the gaming space, I think all the games are going to go in that direction, because people are going to stop playing games where they can't get the value out. I like the World of Warcraft example because I gave 10 years of my life to that game, and I just left my account when I stopped playing. I couldn't sell anything or do anything, and I didn't want to break the end user agreement by putting it on an auction or the dark web or what have you. But all of the gamers understand that their time commitment is very important and should be compensated. And so very bullish on NFTs in gaming. If you just look at what's up and coming, there's a game called Monsters Clan that is doing an NFT drop now. And just like Paul's example, I think they're dropping 10,000 pieces and they have 55,000 people in their Telegram waiting for the drop. So there is an incredible appetite from gamers to go towards a play to earn kind of model. And they may never cash out on it, but when they want to stop playing, they want to realize some of that value. So NFTs are going to be an integral part of gaming just because it's less regulated and less government involvement. And I think NFTs are going to be a very integral part of both physical and classic pieces, with provenances and all the paperwork going digital and immutable, as well as new art pieces that are digital or augmented or virtual and 3D and not necessarily possible to do in the physical world, but are created in the virtual world.
Paul, what is your take on the next 10 years?
Pretty much along the lines of what Brad was saying. I think that people's income streams, assets will move to being represented by NFTs, and then there'll be the systems and processes to manage people to trade them, buy them, enhance them. Like you can buy an NFT now and then they can actually enhance it through the smart contract and things like that. So it's such early days, and it's just going to grow.
Interesting. Derek said, yeah, NFTs are set to explode both in the real world opportunities. Properties will be owned, staked, and valued with NFTs like shares based on the future value. Let that sink in, get on the wave, or be left behind. The tidal wave is on the horizon already. So interesting. If we go to the next question here, and I've got 2 more questions. If we look at the growth, I did some research today, and the growth of NFTs is like 1,700% this year. We've already spoken about some of the risks for investors. Anything that either of you would like to add to this in terms of this kind of growth that's been experienced, the growth that's been experienced this year?
I could just start, but I think it's from in many ways it's from a very small base, like the gaming industry, which we've mentioned many times. Apparently it's bigger than the film industry and the music industry, and so that's a huge industry, and NFTs are sort of way down the bottom there, just getting going and getting started. So it's just like we're actually not even before the first wave. It's just like we're in the first wave, and so there's so much more to come.
I think, Scott, when you look at a number like 1,785% increase, it paints the wrong picture, because an industry-wide increase does not mean everyone who owns an NFT had 17x return on their assets, on their digital assets. And I think that's the point I want to make from this slide, because if it's 1,800% to round it up increase, there is probably 60, 70, maybe 80% of the people who own NFTs who lost money on them. That's just the overall increase in prices. And if you time your purchase wrong, or you overpay for an NFT, you can still lose money. And I want to emphasize that, because looking at this picture, it looks like I have to buy NFTs. I can't lose. Like, it went up 17 times. Even if I caught half of that, I'd be very happy. And unfortunately, that's not how it works. A very small group of people who are very well knowledgeable about new releases and very well connected acquire the NFTs, and then the resale and secondary market process starts, hence the incredible growth of OpenSea and platforms alike. So I would be careful about not expecting any NFT that you buy at any price point to return 17x or anything near that. The 17x is realized by very few industry insiders, and then it trickles down. Can you make money with NFTs? Absolutely. And if you do your homework and you educate yourself and you become an expert, a specialist in a specific type of NFT or specific group of artists, and you build those relationships, the opportunities are limitless. But if you're just looking at this number and saying, I'm just going to go buy some NFTs and it's going to be great, I'd be careful, because this doesn't send the right message, especially like you look at crypto, and crypto market as a whole grew so much, but there were so many projects that unfortunately didn't yield the results they promised. And a lot of people are suffering as a result. And when you look at market trends, it doesn't reflect all the losers in that fueled that trend. It just is an overall picture of what the market did.
My last question, I'm conscious of time here, is Paul, let's start with you. What are your kind of top 3 tips for investors this year and kind of going into next year in the space? I quite like this picture I found. I thought it was quite kind of new age and techie.
Well, I probably use the word, rather than investors, participants, because I think, like as Brad was saying, it's there's risk, and if you're not in the know, you can lose money. So as a participant, you just would have a budget of so much. It might be $100 a month, $200 or $1,000 a month, and you'd follow maybe 6 or 8 people on Twitter, some on then you'll get into their Discord channels and their Telegram channels, but you just follow people when something comes up and somebody says there's this drop and things like that. So I would do it more as a participant than an investor. I think investing is a bit too risky at this stage. It's more like a participant, and from the money you make, you reinvest and reinvest and reinvest.
Okay. Brad, from your side?
I think top 3 tips are, if you want to get exposure to NFTs, there are tried and proven ones. And we didn't touch much on fractionalization, but you can buy a CryptoPunk, obviously a fraction of it. That's a much safer exposure than going and buying some unknown NFT that may or may not do really well, but that's very high risk. Second tip is, if it's art, buy things that you appreciate and like. So even if it loses its whole value, the intrinsic value is the appreciation, the positive sentiments you get from having it and looking at it and sharing it with friends and family. So it changes the dynamic. You may put $100 in something and it may become worth 0, but if you really love seeing it, you can buy a cheap screen and put it as a picture frame and project it there. Now you have a really nice piece of art that costs you $100 plus another 100 for the monitor that you can showcase and talk about and share with friends. It becomes something more than just, oh, I want to make money with this. And last tip, I'm just going to reiterate what I said. Do your due diligence. Don't just go into something because it's hot or someone else is going in or you see that it's appreciating. There's always going to be the next Beeple. There's always going to be the next CryptoPunks. Just be patient and pick the right projects to get involved with. And more you know about the project and the asset and the pieces you want. If you want to get involved with NFTs outside of gaming and art and buy a property, then come talk to us, because that's really fascinating what can be done on the lobbying side of things and government relations if their constituents start asking for the land registry to be on blockchain and they want to put their title on the blockchain. Anything that engages our governments and makes them technologically savvy, educated, and moves that goalpost, I'm more than happy to be a part of.
Perfect. So there are a plethora of questions and comments coming through, many of them very, very exciting. What I'd like to do is run through just a quick update in terms of our side, and then move to the Q&A, and then, as I say, we got that special with Paul. Just to remind everyone, this is the second webinar of Wealth 5.0 2021. We do have webinars coming up on the 5th of October, the 19th of October, the 2nd, and the 16th of November. So look out for those. It's part of a whole series so that you understand. I think in terms of our space, and we talk a lot about real estate and where this industry is going and how technology is not disrupting, but innovating this space. What we really do in simple terms, and it's interesting that you said globalization of property transactions. We go out and we try to find the best trusted partners in America, England, Australia, Europe. They list the properties on the platform. The global investors get access to them and they invest online. There's 4 simple steps where they sign up, they complete their KYC, etc. They fund their wallet, and ultimately they invest. And when one looks at it and just kind of sees how easy it actually is to participate, it's you're literally signing up. Are you going through the process to self-verify yourself, what country you come from, and how you effectively accredit yourself in terms of what level of investment you are comfortable with investing in. Then you go to your wallet and you actually set up your wallet. You do your KYC, which is know your client, and your AML. Everything happens online and digitally, and you effectively fill it in. Now, this is a bit of painful. And unfortunately, it's not us, it's worldwide government regulation, but you only ever have to do it once, and then it's done and it's set up once and for all. You then go in and you effectively, upload all your documents, and it's really quite an easy process. And then once that's done, you effectively fund your wallet. Now, you've got a unique code there. You go in, you fund your wallet. You've now got a digital wallet globally. You can safely and simply invest in multiple markets around the world with complete diversification, all coming back into the space. Someone did ask me, are we looking at creating crypto wallets? I was in Paris 2 weeks ago with the CEO of Lemonway to understand where they're at. Lemonway is, your money's protected by European law and backed by the top 5 banks in Europe. They do have crypto plans coming. We're also looking at Circle out of America, using USDC in the crypto space. And then finally, the last point is that once you've funded your wallet, you can go in, you can look at real estate investments, you can look at alternative assets, and you can go in, you can read all about it. You can literally, see all the different returns. You can understand the risks and the key milestones, etc. And this kind of gives you a full update. There's an investment calculator so that you've got complete transparency around the fees, how it actually works, what you get paid out in year 1, 2, 3, and on exit. So there's complete transparency through the process. And then the last part is that you actually want to go and invest. And in this particular deal, this was a deal in Portugal, and someone was going and investing from $500. They literally digitally tick everything. They read their contracts. They effectively have the digital contract, and they make the investment. And what you've literally seen in under 30 seconds is someone being able to participate and invest around the world. So it is truly exciting where the world is going. We've now got members in 168 countries. We've done over $1 billion of deal value. Over $100 million has been invested through the platform. And when one looks at it, when one considers how NFTs are changing this market, it really is only the beginning. If you take the assets under management is expected to increase to 145 trillion by 2025, according to PwC, of which 21 trillion is going to be in real estate, private equity, and debt, and it's going to more than double in size over the next 5 years. These numbers become really, really significant. There's going to be fewer and fewer firms managing more and more assets. There's going to be faster growth in Latin America and Asia Pacific. The alternative asset class is, as I said to you, going to be 21 trillion. And active investments will continue to lose their markets to passives and alternatives. And you can see the graphs here growing around the world where these opportunities lie. And if you take just 1% of the alternatives, that's 211 billion. And if you just take 10% of that, that's 21 billion. And if you take 1% of that, that's 200 million. And the logic is that if you take an entire market of 21 trillion, and you take 1% of that, it's 211 billion. And if your company was managing just 10% of that, which would be 21 billion, you'd be earning over $200 million a year in revenue at just 1%. And so when one looks at what's happened around the world, there's been massive growth in secondary markets, companies like Robinhood and some of their competitors, which is effectively the stock markets. But where the opportunity that we've been talking about tonight is NFTs. And why NFTs? Because it's really in the alternative space. It's in primary markets, it's real estate, it's art, it's private equity, it's things that are not listed on an exchange. As Tesla said, Elon Musk said many years ago, they're going to go out and build a sports car, and then they're going to effectively use that money to build a more affordable car, which will build a more affordable car. Well, in the real estate space, we felt the same way. We started in the beginning with helping investors invest from $100,000. We then got it to $10,000. We then got it to $1,000, and we currently are at $100. And with the likes of NFT and blockchain, truly we can get to this third phase where ultimately you can get it down to $1 per investment. The other thing that's really interesting, and we do have a webinar later in November with Kathy Wood and some of the ideas around it, but digital wallets are where the world is going. It really makes it so much more convenient for investors. And just with the number of investors we've got at the moment, the valuation, according to her, would put it at over 32 million. A question I got asked today, and funny enough, being in London, catching an Uber, there's plenty of platforms that are out there. There's platforms in America, there's platforms in England, there's platforms in Dubai, there's one out of the Seychelles, there's platforms out of Asia and even Australia. But when I catch my Uber, the last thing I want to do is have a different app in every single country. And that's just catching an Uber. Can you imagine actually trying to manage your assets? And that's why from a Wealth Migrate perspective, we decided that people wanted to be able to diversify and invest globally, but ultimately to be able to safely and simply manage it all in one place on one platform. And when you look at the Sustainable Development Goals, you know, the number one goal that the world is aiming for by 2030 is no poverty.
You have to do that.
Now, I wanted to share with you this quick video, and funny enough, David Orban's online. I interviewed two of our advisors, one being Roger Hamilton and one David Orban, on where they saw the future of real estate going.
You have to do that because the democratization of real estate is going to be the biggest change that happens in fintech beyond anything else. In terms of, like, you know, it's going to disrupt more than the banking system. It's going to disrupt more than what's happening in stocks and shares. It's going to disrupt because basically property is the one last non-distributed asset. I mean, that's just the basics. It's like the process to buy a property is the most ridiculous thing ever if you actually think about it. And it could be as easy as basically buying a stock or a share, right? And that's what is going to happen for sure.
In the world, there is a huge geopolitical shift underway today. It is designing the new economy of the 21st century. Technology-driven transformation is disrupting incumbents everywhere. Within this picture, there is a need for clear messages, a solid value offering, a great need for flexible platforms that allow for diversification and a correct, transparent risk management. Each of these components are crucial and are available in the Wealth Migrate platform. The value proposition is huge. And that is why, in my opinion, it is now the right time to invest in promoting it and in accelerating onboarding at both sides of the marketplace.
So just a little video, you know, we're talking about Wealth 5.0, which is all about the impact that we're having, the creativity, the high touch, the high tech, and the digital space. And when you look at it, we talk about the Wealth Meta Marketplace. We've got the platform that sits in the middle. We ultimately came out with Wealth Migrate, which was our first global real estate marketplace. We then launched the Wealth University and the Wealth Community. We launched Wealth China. We launched Genius U, which was Roger Hamilton, and is currently IPOing on the New York Stock Exchange. We launched Zuza out of England. We then launched Cashbox and Private Wealth Global, which is our kind of first class. And this is where we sit as we stand at the moment. We are currently launching Yates and Wealth, which will be a genre. We are in the process of getting Wealth SA up and running. And then Sharia compliant Wealth is also looking to go live this side of this year. Possibly Women in Wealth before Christmas, Wealth India early next year. And it just shows you how you can roll it out all on the same platform. And with time, multiple different jurisdictions, different genres, and even different price points. But it gives you an idea of the bigger picture of what's happening. Phase one for us was high net worth investors. And as I said, the $100,000 to the $1,000 investor. Phase two is all about the scalable operating profit between the operations, which is the current business model, and the venture building, which is why these NFTs and stuff become so important. And then phase three is where it all becomes the meta marketplace. You can see the board and the advisors that we've got, you know, across the team. If people are interested in the financial summaries and what we're doing in terms of the business, we've got all of those. And really the opportunity that people have, as I discussed already, is that one can wait until there's an IPO, one can try to get involved in private equity, or one can get involved in the growth phase of a business. And you can see how this industry is changing and adapting and where the opportunity lies. There are multiple exit strategies that we're working on. I'm currently in England, actually to go and see my CFO down in Southampton to work through a number of these different strategies. And then the other reason I'm in England is that we are currently setting up our next campaign with Cedars. We raised $2.5 million with them from people in 43 countries 2.5 years ago. And we're looking to do a second raise with them now. It's like doing a mini IPO. We are doing an entire valuation as we speak with an external company that's out of Singapore. In fact, the guy's head of Credit Suisse for valuations. And the opportunity that lies for people that want to participate is that they can participate in the global group. They can earn a convertible debt of 7 to 10% over 5 years, and ultimately get to be a shareholder in the company. We're raising $5 million, $3 million in debt, $2 million in equity to continue the commercial acceleration of the business. We've already got $2 million in the bank with another further $1 million in commitments. The returns are based on the size of the investment. The interest is paid quarterly, and it's secured against the group real estate assets. And then with COVID-19, it's interesting how we discussed how it's had such an impact on the NFTs. It's equally had an impact on all entrepreneurs and institutions as they've realized that they've needed to go digital. And it's been amazing, the demand in the business-to-business environment, which is one of our biggest growth spaces. And that's why within the venture building space, we've been working with fintech entrepreneurs and really a business within an ecosystem, accelerating that growth and providing them with an incubation to marketplaces. We are looking at strategies around an IPO in the foreseeable future, learning a lot from what Roger and their team are doing. And then lastly, where does the company want to go and how do we want to achieve it over the next 5 to 7 years? I think we've spoken a lot today around some of the technologies that are enabling. And as Brad said, there's an opportunity within the globalization of property transactions. It is changing, whether it's us or someone else, it's going to happen without a shadow of a doubt. And this, for us is not about doing it all ourselves, but about strategic partnerships and community and growing significantly together. So if people want to participate, as I said, the convertible debt, we've got a silver level at 25,000 with a 7% interest and a 3% discount. There's a gold level at 100,000 with an 8% interest and a 7% discount, and a platinum level with $250,000, 10% interest, Class A shares, and a 12% discount. And it converts within 5 years. The capital is protected against the real estate assets, and there's already $2 million in the bank. And then lastly, on the equity side, we've only got up to $2 million here. You can start at $10,000 with a 10% discount, $100,000 with an 18% discount, and $250,000, which are Class A shares, and a 25% discount. This is based on the 2020 valuation. We are, as I said to you, currently going through the 2021 valuation, which is being redone for Cedars. If you want to speak to our community, both Fritz and Alex are available. They are part of the Global Wealth Group, and they specifically understand our strategic partnering community and the opportunity with regards to Cedars. So reach out and chat to them. And then just to remind you, we've got a number of different webinars, as I said, so don't miss out on them. Ultimately, why are we doing Wealth 5.0? Well, it's all about putting smart investing in every single person's pocket. And without further ado, what I would like to do is, while I have the screen up, Lee, there were a bunch of questions and stuff. I know we've still got the bonus coming from you, Paul, and I am conscious of the time here, so I'm trying to go through this as quickly as we can. But are there any pertinent questions that are relevant for Brad or Paul? And maybe, Lee, if you can put up the survey while we're going through the Q&A. We lost Lee. Let me see here quickly where.
Lee's back. Sorry, Lee's muted. It's.
Yes, I just wanted to see if there's any particular FAQs or questions that we didn't answer.
Can you see the FAQ? Can you see the chat box?
Yes. Yeah. The surveys come up. Someone's been asking, or quite a few people have been asking, where they can get links to all the different websites that I found, and I thought it might be a bit cheeky, but if you fill in the survey, then we'll send you the email with all the links. It's called bribery and corruption.
I'm just going through some of these questions. So there's one here that says, if an artist or an NFT creator can sell 100% or a percentage thereof, and they benefit from the increasing value over time, how will this work?
Well, 100% of what?
They said an NFT creator. So I am not sure it's whatever's being created. I would imagine that they are, because they started it with the artist, that it is an artwork similar to Beagle.
Okay. I'll try to answer that one. So an NFT creator, if they own and operate the smart contract, so the platform the NFT is created on, can get the 100% of the proceeds from the initial sale. They can also program the NFT to get the 100% of the second sale and the third sale, which would mean that it wouldn't happen because no one would have any incentive to sell that piece of art or buy it if all the value from the sale programmatically always goes to the creator. So what happens in more practical situations is you create an NFT on someone else's platform. So a percentage of the initial sale goes to the platform, usually between 10 to 30%. And then a percentage may go to the person who created the NFT, the smart contract, or the team. And then rest goes to the artist. Now, the second time it's sold, you can structure it so still a portion, 5, 10, whatever percent goes to the artist, and a portion goes to the creator of the NFT. The appreciation comes in because you're making a portion of the sale. So let's say you sell the NFT first time for $100. That's great. You got $80, platform and the tech team got 20, you're happy. Next time it sells for $10,000 and you only get 10% as an artist. That's what's programmed. But now you made $1,000 from the next sale instead of the 80 you made on the first one, the original. And then this goes viral, it's on Christie's, and the next sale is $1 million. Now you get 10% of $1 million, so you get $100,000. Although it's a smaller percentage, because the asset appreciated, your cut as the creator or the artist is much higher than the original sale. So that's the idea behind it. But because it's programmatic, you can program it however you want. And of course, you can play around with the uniqueness of the asset too. Do you have 1 out of 10 or 1 out of 1 or 1 out of 1 million? That will dictate how frequently you get paid, because if you create a bunch of copies that are authenticated on the blockchain as originals, but there's so many of them that pretty much everyone who wants that piece can have it, then it's not going to appreciate much. If you create just one, then it's a unique asset and it may appreciate faster.
Great, thank you. We've got a few comments and questions that have come through about how do you identify an NFT's value?
I'm going to cover that in my presentation, but so Brad, sorry, over to you.
No, I was just saying it's what the market values it. I mean, how do you identify it? I guess since it's a part of your presentation, I'll let that be. But the price of anything in a secondary market is what someone else wants to pay for it. Same as real estate, same as art, same as NFTs. If someone comes and says, hey, that 8-bit human-looking kind of image, I'm going to pay $15 million for it, you say, okay, thank you, and you sell your CryptoPunk to them. As simple as that.
And Lee, there's a good, interesting question here, which for me is, can NFTs be applied for like the example of conservation of rhinos? It's just interesting because it's away from money, but actually to like a good cause.
Yeah, I mean, you can create NFTs and you can program them to pay out some of the proceeds to any cause you want. I'm actually working on 2 collections, one that's going to benefit orphans globally, and the other one, homeless people. And every time these NFTs move, some nonprofits globally are going to get a portion of it, and that's relatively easy to do. Then you can actually put a larger chunk of the transaction towards that cause. So people who really want to support rhinos can go and buy this NFT, not with the intention of making a profit, but actually supporting a cause they believe in.
That's very interesting. There's a question here about what happens to NFTs if Ethereum network gets shut down by the Fed. I suppose it's in relation to any asset class if the governing body shut them down. But what are your views on what would happen?
Well, an Ethereum network cannot be shut down. The only way the Ethereum network will be shut down, because I know a couple of people who put nodes on satellites, is if we had a cataclysmic event that destroys everything on this planet and orbiting it, then Ethereum will be shut down. But SEC or any other government organization is not going to come and shut down a distributed network where, as long as there's one full node standing, all the information is intact.
And then Scott, maybe this one is for you, as how we see NFTs playing in our global wealth group ecosystem. And do we have plans with cryptocurrencies being able to be used on our platform? That part you've answered, but how do NFTs get integrated into our ecosystem?
Yes, I think this is something we've been talking about for a while, which is where we've kind of got the operational platforms that are going to work within the current fiat model, and then we've got the venture building space, which is to make sure that we're taking advantage of these future technologies. I learned one thing the very hard way when I first met Brad and David with the whole ICO space, is that if you go too fast into the future, the real world takes time to catch up. And so you actually have to have everything running in a parallel universe where, you know, people need to be able to participate in, I'm going to call it the fiat world, the current old world, and then you've got to have plans for where the future is going. And that's why for us, we're separating out the teams to be able to have a foot in the present and be preparing for the future.
Perfect. I think that unless you've seen something else, Scott, that covers most of the questions that we were asked. There were lots of comments that came through, but that was most of the questions. I mean, there is one about tax implications of NFTs and how you would identify them to put on your tax returns, but I think that has to be taken up with your tax advisor and make sure you have someone who understands this space that you play in. We cannot give tax advice at all, and that also goes to the value.
Lee, I do think there's quite an interesting one here, and I do want to keep quiet then because Paul needs 20 minutes and I want to make sure we can wrap up on the hour. But NFTs are still tiny, pretty much all on ETH, and they're causing ETH to creak. SOLADA dot Kusama, I hope I'm pronouncing it right, haven't even kicked in yet. When these level 1 chains kick in, I believe we're going to see an explosion. Boom, I think platforms are safer than actual NFTs if you don't understand them. So that was from Steve, and it's just interesting. There's quite a few comments coming through. We do have the crypto WhatsApp group for people that are part of our inner circle, and you know, these type of conversations become really valuable. You're never going to know everything in one night. You know, it's just not going to happen. You know, Brad also said check out monsterclan.com if you want to experience an NFT airdrop. So thanks for that, Brad.
Yeah, I figured if people have never experienced a fair distribution or airdrop, it plays very well into Paul's community comment. It's a community building exercise, so it could be interesting. And you know, I know about it because I like the game. That's why I posted it.
No, well, brilliant. Well, my suggestion, Lee, is that we pivot, and most people have now got the theory, and now they're going to say, well, how do we make money? I would argue before Paul talks that one of the ways you can make money is by investing in a company that is innovating within the space. But equally, Paul's going to share with you how you can participate. What was your word? Participate at a smaller level. I also understand that it's getting late in all parts of the world, because even for Paul, it's like 4 o'clock or 5 o'clock in the morning. Some of us are getting soporific here in terms of understanding it. So I want to kind of move to you, Paul, while we've got the energy to understand what you've got to share. And Brad, just from your side, you're very welcome to stay on and look at it. And if you need to duck, I fully understand and deeply appreciate your time and energy tonight.
It's my pleasure, and I'm excited to hear Paul's mastery on how to make money with NFTs. Okay, I want to learn too. Maybe there are tips and tricks there that I'm missing out on.
Yeah. All right. Well, I'll just share the screen, Lee. So I should be right to do that.
You should be, yeah.
So can you see my screen there? Okay.
No,
Yep,
we're
we
seeing. No, we can't. We're seeing the two slides. So like where it's kind of slide 2 and slide 3.
Okay. I'll just go back to sharing the one. There's trouble with two screens and they've been playing up. So. Right. I'll just leave it. I won't put it in presentation mode. So you can. So what can you see now, Lee?
We can see the slides down the left-hand side, but the main
Good.
screen
So
just has the 12-year-old. Yeah.
Okay, so we're good to go?
Yeah.
We're good to go.
So, so I've said it was like a side hustle and how it can be a valuable income stream to you. There's so many examples going around. Like there's this 12-year-old coder that learned in 400,000. He created his, I think it was whales that he created and sold them. We're not all in that league, but that's something that's being done. So you say, well, how did it work for you, Paul? Well, it's pretty basic, really. I bought 6 lizards for $600. Then I sold 4 of them for $4,000 and I bought 2 bulls. Then I got 2 more bulls. And then I sold 1 more lizard. And then I bought 5 guardians of the universe. And you sort of think, oh, gosh, that sounds weird. But that's sort of how it is. You put some money in, you buy something, you sell it. And as Brad was saying, if you're in early, you get an advantage. It's when it's what's called minted, when it's made, when it's created or distributed, really, more truthfully. And so, these are all the bulls I had, and you certainly get emotionally attached to them. You don't even like selling some of them after a while. But if you look at the ways to make money out of NFT, you can create them as an artist, you can collect or flip or trade them, you can invest in them for the long term, like with what we call bored apes, this is one of them there, one of the bored apes, or you can upskill yourself. You can teach people about them or help people with them or run classes on them. So creating them as an artist, collecting, flipping, trading, investing, and upskilling are the things you can do. Now, OpenSea, as I said, they're opening about 3,000 wallets a week. If you look at their turnover there, 473K, 8 million, 2019, 2020, 24 million, and then $1 billion. And it's moving now at an unbelievable rate as it moves forward. And when you go to OpenSea, you just get there's so many pieces of art, millions and millions of pieces of art that people look at, they bid on. And people have their favorite areas or favorite topics. Over the left there, you can see CryptoPunks, mutant apes, art blocks, bored apes, loot, all different areas of artworks that people can check up on. So people say, well, how do you create one then? If I were to create one, well, on OpenSea, it's actually relatively simple. If you've got a JPEG or an MP4 or a GIF or a PNG or a WAV file or whatever it is your digital file, you just drag and drop it in there, you give it a name, you provide the external link to it if you want to give people more information outside the website, you add a description about it, how many you've got, and then you just push publish, and of course pay OpenSea some fees. But that's at the moment how at a simple level, how you can do it. If you're going to create 10,000 of them that are all subtly different, then you need to have, special software and that to do it. So in the end, it gets displayed on OpenSea pretty much like this. And, one of the, I suppose the team leader in all this is something called the Bored Ape Yacht Club. And we were talking about community before, but what they've done here, they've created a real community around this. In some New York clubs, you can get in there if you own a bored ape, because they're like $200,000 or $300,000 each, up to $1 million for a JPEG. And people say, well, that's crazy. How could anybody pay that much? But it is supply and demand. And I'd like a fraction of one of these at all. And there is a possibility to do that. But see, this one with the King's thing, it's presently offered for 1.48 million US dollars. And that's what it looks like. So you can look back and see, well, in the beginning, that particular one was minted and a guy called Pranksy bought it 4 months ago. He then sold it for 3 Ether, which is about, $10,000. And then he then sold it to D Farmer for 8 Ether, which is like $24,000. And if we go back, we can have a look now. He's trying to sell it for 390 Ether. So he bought it for 8. He wants to sell it for 390, which is a pretty good margin. And then you can have a look also at the same time, are people interested in it still? You can see, well, nobody's saying they'll pay 1.6 million or 1.4 million, but they are saying that they'll pay 161,000 US dollars, which he could accept immediately because it is an offer that's sitting there for him. So that's sort of the mechanics of how all that happens. Each item that is being sold has got a page, and in this particular one we can see the Bored Ape Yacht Club. There's 10,000 items there, and they're owned by 5.4 thousand owners. So that means on average people own 2 each. So that's a good statistic, and you have to remember to always check that. I actually bought some 2 or 3 months ago, and I'm the largest holder, and there's only 24 holders and 10,000. So I love the artwork, but I didn't look at the community side. So that's a hard learning for me. But you can see here the floor price is 41 Ether. So let's say it's probably about $120,000 to buy any one of these Bored Apes. So that's sort of the technicalities of it. Each one of these apes has got different characteristics, and people look at the color of the background, the clothes, the earring, the eyes, and these are the traits that I make them unique. And sometimes it might just have one diamond earring or something, and everybody wants the one with the diamond earring in the shape of Bitcoin or whatever people choose to have like that. And in terms of the subcategories, like the eyes, they might say they can be bored, bloodshot, sleepy, closed, sad, which means that people can you can see here 1,700 of the 10,000 have got bored eyes, but only 551 have got sad. If you scroll down further, it might be one eye might only be one of them, which makes that particular one a lot more valuable than other ones. So they usually specify it here under properties in OpenSea, which you can see down the bottom left of your screen there. Army green is the background, leather jacket, it's holographic, that's the eyes. Golden brown is the skin color, and the grin is gold grill, and less than 1% of all of the apes have got that particular characteristic. So this is the uniqueness, the scarcity, and things that people are really going after. Now, you don't need to pay that much for apes. Like I recently bought a couple of these, what's called baked bears, and they're just a different type of one. There's all different types of them, and they were minted a few days ago. And in this particular case, you see there's 1,900 of them, 655 owners. So that's like each owner owns about 3, which isn't so bad. The floor price of them, that means usually the cheapest one looks like it's around $180. And so that's how you assess one of these things, and then maybe you sort them from the lowest price to the highest, and you choose which one you like, and then you pay for it. So how do you mint an NFT? That means how do you get it, really? There's a button usually on OpenSea where the arrow's pointed that takes you to the website for this particular opportunity, because they get to OpenSea once they've been minted, but before they're minted, you have to find it. Or you go to like that masterclan.com that Brad mentioned. They'll have a page that'll be preparing for minting. And so you go there and they say, okay, if you want to buy one of these, please connect your wallet. And that's usually a wallet called MetaMask, which is an extension in the Chrome and the Brave browser. And so you have to install that in your browser. And then it says connect wallet, and you connect that. And then they tell you, okay, if you want to mint one of these, it's going to cost you 0.04 of an ether, which is, you know, like $120. So you make sure you've got that money in your wallet, plus maybe $40 or $50 for gas fees, and then away you go. And in this particular case, the wallet plops up and it says, in this case, it said to me, I've got insufficient funds. I need more funds to buy that. And then once you've got that sorted, then you can actually buy it. And each NFT has got rewards. You know, as you become part of a metaverse, you get different things. So all that's included, and you can read that on that particular website. Now, if you've bought one and you want to sell it, well, you pretty much go back to your place on OpenSea, where you have your own account. And here you'll see I've got a couple of bears and I've got 3 what you call mafia fish there. If I want to sell one of those, then I just click on sell. And then what comes up, I first of all probably check to see if what the price history's been on that. If I've bought it for, I see, like I remember I might have minted it for 0.04 or something. I want to make sure hopefully I get my money back. And then I click on sell, and then it says set price. I put the amount I want to sell it on, and then pretty much you click post your listing, and that's how it works. And so it gets up there ready for sale. In this particular case, this junkyard dog I've got up there at 2 ether, $7,000, and I can lower the price if I want to sell it cheaper. But that's how that one works. And what happens is whenever you get an offer, you get an email. It's like in this particular one, you have an offer of 0.152 for your lizard. So somebody's offering me, I think I've got the dollar amount for it. They're offering $597 US for my lizard. And that one cost me, I think it was 0.03. So, you know, it cost about $90. So you think, well, will I take that? I know it actually costs $135. So that's the mechanics of it. I minted it originally. It was minted and sold to Dave. Dave sold it to me at 0.045 ether. So that's so now the bid is there for $597. It cost me $135. I have to decide whether I want to take that $462 or carry on. So how do you find out about good ones to buy? Well, I follow a guy called Elio Trades, mostly because I followed him all through the journey of his crypto journey and the fact he's developed Super Farm, and I've always found his hints and things to be very, very accurate. He's on YouTube every Wednesday morning with an NFT show that is absolutely information rich and good. And then there are other people, like we saw Gary V, which Scott showed you. He's if whatever Gary V's into is probably worth following. And then there are other people on Twitter. Maybe you can select 5 or 10 to follow there. And things happen, like in the information stream, I might say there's an NFT drops on the 9th of 3rd at 1 p.m. Some people say that. Somebody says this Teddy's minting at 03. Buy some of these. So you have to look through and see what they're like. And so somebody said here in this particular tweet, these are some NFTs by Michael Klein. And then you have a look, who's he? And they say, oh, he's a contemporary artist, works in museums, etc. And then the bottom you see, oh, Eminem used his animations in Pillman for his anger management tour. You think, okay, the guy's got some credibility. You go to his Discord channel and you click and join that and have a look, and then they'll say, you know, where the website is that you can mint that particular thing. So that's, you know, that's that journey that you have in terms of we did get this question asked, how do you assess if it's a good NFT? Well, as Scott mentioned, we mentioned in crowdfunding, and because with crowdfunding and startups, you never really know how to value them. I had this model story team and empathy traction. And it just quickly explains to you that you can actually get online lots of statistics about how many people are involved and what the prices are and everything like that, and what the rarity score is of a particular product. But what I found was that, you know, you can see, online what all the things are worth, but whether or not the things in the long run going to be there. So I look at it from the story, like, is it a goodie? What's the subject like? Is it appealing? I have a holder. Is it old? What's its rarity score, its release date, liquidity, things like that. I'll send this through to you, Lee, so you can distribute it. And then looked at the team, who's the creator, the artist, are they followed on socials, do they interact with fans, have they got a good track record, the social media, things like that. And then, of course, the traction, how many users are, or interested people, participants are there ready to buy it? Is there a lot of activity? So you look at these things, and if you look through for Bored Ape Yacht Club, of course, now looking at it, if they the story is amazing, the team is awesome because they've just dropped the mutant apes and they had serums and they had all sorts of exciting things. And then in terms of traction, is it actually really moving? But in the beginning, maybe it was only 26 out of 30. Maybe you thought, oh, the story's okay, I'm not sure about apes as a subject, team's good. Yeah, they seem to have a bit of traction. So you don't actually know, but I usually score those things in my head to see how they are. So if you take this like Based Fish Mafia one that I recently bought, well, I saw there's like 3,000 owners that own 10,000 of them. The floor price was low enough, which was quite good. They'd already traded 454 ether of them, which is about 1.2 million. So I thought, well, okay. They look okay. They seem to be attractive. And looked in this group, I saw they got 14,375 followers. Just did a little bit of homework and came out and thought, okay, well, all right, the story is good. The team seems to be active in channels and things like that, and they seem to have quite a bit of traction with 3,000 owners already. So I say 26 out of 30. So I decided, okay, that's what it is. So Scott, that's a thought as far as I would take it. I think things like setting up wallets and things like that are a bit more technical. We can cover that another time, but I'll hand that back to you.
Well, it's fascinating. Can I ask a question though? Just in terms of a use case, I now buy myself I don't know what I call it, a crypto monkey or something, or crypto fish. Okay, fine. So I buy the fish. Now someone else wants to buy it. So let's call it speculation. But what do I use the fish for if no one buys it? Like do I like print it out and stick it on my wall and say, okay, now I own this lack of fish? But or what, like that's the part that I don't understand. So again, I want to come back to the gaming thing, where I was absolutely blown away that someone was spending $100,000 on a sword, but at least he got to walk through the thing, and everyone, I presume, was like, wow, look how cool his sword is, or whatever. Like, I don't know, like, what do you do with your fish or your
Well, there's, I suppose the easy answer is you could do whatever you want, but I've still got some crypto kitties that are worth absolutely nothing, like they're 0.00001 or whatever, and I've had them since 2017. So there's nothing much I can do with them but just sit and think, well, maybe somebody wants to buy them because I don't even like looking at them. But if you look at the profile pictures of Gary Vee and all these people are using them for their profile pictures, first of all. That's one way. And, it's not without beyond the realm of imagination that in the future, you will move through metaverses with your Bored Ape profile and things like that. So, and also you've got your gallery, you can share it with people and show them, or you can print it out. But I think that this is just beginning. I think that people are actually going to live in metaverses and things like that with these characters, with their NFTs. People will have their own galleries and everything like that. And, some of this is a bit difficult to process, but for me, you hope you make money out of them. Some of them you don't. I've got a folder actually, which is hidden. And so the ones that I'm not so proud of, I just put in there and then I forget about them. And the ones that I don't mind people, because anybody can see your NFTs, like they go to your Ethereum address, and not so much OpenSea, you can actually split them up and hide them. But some of the things like, I think it's called DApp Raider or something like that, people can go there and they can see all of what you've bought, and they can see, oh God, this guy's an idiot. He's got his one thing that there's 10,000. He's got 24 of the 27 that was sold. And then, you're not going to get anywhere. But yeah, there's many answers to that, Scott, but I think it's going to be part of the future. But yeah.
No, I appreciate it. I acknowledge that this is a new space. It's just I find it like I must admit I'm feeling very old right now, Paul. Like I can understand when I look at a property and I'm like, I can buy this property, it's going to make me a return, I'm going to put a tenant in it, and then you show me some crypto bear or something, and I'm like, I'm struggling to see what I would buy and use my crypto bear for, you know.
But it's what as Brad said, it's willing buyer, willing seller, and that's the thing that you might think that, but other people think something completely different. Like I can remember when this Elio said on his show, guys, you should buy a Bored Ape. They're about an Ethereum each. And I thought at the time I was buying things for $100, and I said, well, I'm not going to spend $3,000. If I go out to my wife and say I've bought a Bored Ape for $3,000, and she will say, well, you're mad, you know, that's our money and you're just wasting it. But if I said to her now that that Bored Ape is now worth between 300,000, 1.2 million, I'm sure she'd be really happy.
Lee, I think we could go all night with regards to it, and all morning actually for Paul. But and actually Brad, I think if he's in Los Angeles, we've got both of them on that side of the world. But actually I think it might just be me that's not tough. But anyway, all good. But yeah, I think we're on the 2-hour mark and probably should aim to wrap up.
Thank you, Scott. So just a quick wraparound, like we always do at the end of our webinars. If I could have some closing comments or last little snippets of information that you'd like to share with our community before we close off. Brad, if I could start with you, please.
Yeah. I mean, I think this is a really exciting new asset class, and just to help Scott grasp it a little better, think of it as trading cards or collectible cards. The people used to collect little cards of baseball players, football players, all sorts of athletes, celebrities, and these were cards with the athlete's stat on them and a picture, and you know, they became more and more and more valuable, whereas they were first invented as giveaways for groceries, you know, supermarket goods or ticket sales for an event. So the value comes from the uniqueness of the asset and the collectability. So with digital assets, of course, the propagation is exponential because they're so much easier to create. You don't need to work with a printer. You don't need to ship anything. It's instant. You buy a Bored Ape, it's yours within a minute. It doesn't take 10 days to get to you. So that instant gratification of dealing with digital assets and NFTs is also a big draw for a lot of people. Yeah, they can buy gold coins or silver coins and wait for them to arrive from the mint or the broker, and you know, it takes time. Then they need to safeguard them in a safe and protect them, or they can buy Bored Apes and it's on a, you know, a hardware wallet, and that's it. They don't need to create space for it, and they know the value is going to be there with certain certainty. And I think that's really what's fueling the craze right now. But do your due diligence before you buy anything.
Well, for me, I think.
Thank you, Brad, and thank you for bringing it back home to something that us less tech savvy people could understand. We really do appreciate it. That analogy of the playing cards is spot on. So thank you. Paul, over to you.
Well, I think it keeps you young. You know, if you're following all this stuff, like it's keeping your brain active and it's enjoyable. But David Bowie, back in, I think it was in the 2000s or so, what he took is he created what was called the Bowie Bond, and that Bowie Bond wrapped around 10 years of his music catalog, and Wall Street paid him $54 million for the income stream from that particular music catalog, and it was yielding 8%. And then Ground Control to Major Tom went to the top of the hit parade, and the return jumped to 13% or whatever, like, and the investors were very happy. But I think that, you know, in some ways, the traditional structure of corporate companies and ownership and all, I think it's going to change. And I think what's going to happen is that people are going to earn money from income streams, and NFTs are going to represent them. And you know, I think even the share market as it is probably going to morph into something different, because a fungible share where everybody's is the same is just too much hard work with the regulators. You know, it's just you're going to have something that's unique for each individual and what they have. And so I don't know where this is going to end up, but I'd say the generation that's developing now are not going to be mucking with trust and credibility embedded on the blockchain. You don't actually need the regulators for a lot of these things. And I think in the future, there's going to be some big changes in ownership and income and things like that. And it's going to, you know, it's going to be an exciting journey. I'm not sure I'm going to be around for all of it.
This definitely does keep you young, because everything that is new and on point, you seem to be investigating and having a finger in. So well done, Paul.
Yeah, thanks.
Thank you for what you have shared. Scott, before we close off, can we have your closing comments, please?
Well, firstly, thanks to everyone who's been online for over 2 hours. It's always amazing. There's lots of very valuable comments coming through. Brad and Paul, I really respect and appreciate your time. And to Lee, you and your team for putting these together. A lot of people don't understand all the hard work that's happening behind the scenes. I suppose the metaphor I'm left with is that, you know, in the late 80s, we see those movies of people with massive cell phones where it like kind of went from their shoulder to above their head. And, you know, I don't know if you noticed when I was showing on the CNBC thing, something flashed up to say Apple's just launched their iPhone 13. And it's amazing how cell phones have changed our lives over the last 30 years, effectively. I think what Paul and Brad are sharing with us is like that massive cell phone that's sitting on your shoulder, and where maybe I can't understand why someone's buying a bear or a fish. I think we've got to think broader as to where this can go in terms of industry application and the impact it's going to have. In the same way, a cell phone was used by very few people in the late 80s. In fact, it was used by very few people in the late 90s. But now almost no one on the planet doesn't have a cell phone. And I think that's probably where I see NFTs, blockchain, and crypto integrating and merging with other technologies and having a colossal impact on our lives, and not disrupting industries, but innovating them. That was my takeaway from Brad.
Absolutely. Thank you very much for that, Scott. So thank you to our panelists for being with us and sharing the last 2 hours with our community. We really do appreciate you and all the information that you've so freely shared. Thank you as well, Paul, for volunteering your slides. We've already had 4 people that have reached out to me personally on WhatsApp and asked for them already. We're not even finished with the webinar, so we look forward to receiving those so that we can share those as well. And to our community, as Scott said, who has spent 2 hours with us, we love you and we appreciate you. Thank you very much for being here to learn and enhance your experience as we move through everything that is tech related. I did post the link to our webinar series. If you haven't registered for our upcoming webinars, please do click on the link and register your space. Our next one is on the 5th of October, so we look forward to sharing with you then. But to everyone, wherever you are in the world, please have a phenomenal day, evening, morning. Take care, be blessed, and we look forward to seeing you online soon.
Awesome. Cheers, everyone.
Bye-bye.
Seriously, thanks very much. Thanks, Lee. Thanks, Scott. Thanks, Brad.
Cheers, everyone.